Good evening and welcome to tonight's AHDB Cereals and Oilseeds webinar. My name is Richard Meredith. I am the Knowledge Exchange Manager for the West of England and Wales, and I have the privilege of chairing tonight's webinar here up in Edinburgh. So I'll set the scene with the housekeeping points as usual, as what we usually do. First of all, I want to thank my colleague Luke. Luke works in our digital department. He's shadowing this, making sure that all the technologies works, and we're very grateful for him being there tonight. You are all muted. We can't hear you. Don't panic, and we can't see you, even better still. There is a question box on the right-hand side of your screen. If you haven't done the webinars before, the kind of ethos behind it is that you please ask questions as you go through. We won't shy away. We try and manage them and try and get through as many as possible. But as you might understand, there's not always time to do that. We try and follow up any questions afterwards that we haven't answered. We aim to go around 45 minutes to an hour, so we'll end by 8 o'clock on or around, depending on how many questions we have and how we get through the webinar. There is a formal questions period at the end, so if you do have anything kind of burning that you want to ask then, please do. If you do want to kind of listen to this again afterwards, is recorded and put up on the AHDB website. So if you type in AHDB YouTube into Google, then you should be able to find those recordings, and they're up within the next week. So the first kind of preamble is to kind of say tonight's webinar is about taking control of your grain marketing. We can't give you all the answers. We can't give you the silver bullet for grain marketing, but what we're hoping to do tonight is give you some helpful tips and pointers which you can use along the way in your own journeys. Tonight's webinar is based around a set of questions which you yourselves as farmers can ask yourself as you are marketing your grain. So hopefully that we'll be able to give you some good practical advice to take home with you. Our speakers tonight, this photo was taken a moment ago, are Bill Gray and James Webster. Bill's going to come on to introduce himself in a moment. James is Senior Analyst at AHDB in the Market Intelligence Department. And this is our first webinar together, so I'm really glad you've taken a dive into the deep end, James, and joining us. And so thank you very much. What I'm going to do, as usual, we've got the technical expertise, and then we've got a farmer coming along talking about their experiences, their insights into this topic. A few people suggested Bill to me, so we've come up here and we've come to meet him tonight, and he's kindly joining us and giving up his time. Bill, at this point, I'm just going to hand over to you just for a bit of a kind of an introduction to yourself and your journey through grain marketing. Thank you very much again for joining us, and over to you.
Thank you, Richard. Good evening, everybody. As you can see on the screen there, my name is Bill Gray. I manage the Prestonhall farm and estate just south of Edinburgh on a predominantly arable cropping rotation, growing a standard rotation of barley, rape, wheat, oats, and some spring barley. And I'm also currently the Lothians monitor farm, part of the Lothian monitor farm project up here at the moment. In terms of my grain marketing journey, if you like, I started off as a young manager down in Surrey and then in Northamptonshire back in the sort of late 80s. And at that time, the intervention market probably dominated grain marketing decisions. So we were in a relatively low volatile situation where incremental monthly increases were the norm. And the opportunity to get it horribly wrong was thankfully quite limited. So it was a fairly straightforward situation where cash flow requirements probably dictated largely the selling pattern of the various crops that we grew, with the possible exception of for example, beans, where a human consumption market might spring up, which would come out of the blue, and we would be able to take advantage of that or not. So I suspect that the real challenge for me and probably a lot of other people came when the sort of move on to the world market basis started, and the volatility of the markets that we see today became more normal. And as I found to my cost over the years, the chances and the opportunities to get it wrong have increased dramatically. And no longer the finger in the air approach is really is good enough.
Yeah.
And that probably would describe how I was as a marketer. It was a bit of a wet finger in the air and hope for the best in terms of making sort of sensible decisions other than cash flow requirements, for example. So I suppose really where we've come to today is that along the way I've realized that I needed to take a little bit more control of that situation and probably building some strategy into it, which I've done in a number of ways over the last little while. So that's kind of where we've got to today, and obviously having seen what we're going to discuss here, we'll be able to maybe expand on those a little bit as we go through.
Yeah, absolutely. Just to reintroduce myself, I'm James, Senior Analyst in the Market Specialists team in the Market Information Department at AHDB, focusing sort of primarily on wheat and marketing. Bill's given us a really nice introduction there to his journey. And like you said, hopefully we can provide you with some questions to ask of yourself and a few hints and tips to start to get you to take back control of your grain marketing. So we're going to focus really on 4 questions. How do you know what to sell? How do you know how much to sell? The really hot topic question, how do you know what a good price is? And then also, how do you manage volatile prices, which have become the norm in recent years in particular? And then we'll obviously discuss some contract considerations and some things to keep an eye on, although I'm far from a legal expert. So if we start off just by having a bit of a chat about how do you know what to sell? I guess from my perspective, sitting at Stoneleigh, it's all starts with your rotational decision and knowing where your markets are. Is that the case for you, Bill?
Very much so. Our rotation is dictated by where we farm, pretty much. We're the lowest part of our farm, 450 feet above sea level, and we've got the hill from there. Although we're an all arable unit, we're on grade 3 land, perfectly capable of growing good crops.
Definitely.
Of both winter and spring. So from our point of view, our rotation decisions are based around our workload, what our farm can sustain. We've got a range of soil types, so some of those decisions are not necessarily based on what we necessarily want to grow, but what actually suits the particular fields that we're growing them in. Having said all of that, then obviously in Scotland we have certain, I suppose you could call them niche markets, but primarily we have markets to sell into. Strangely enough, they're dominated by the production of alcohol, but there's nothing wrong with that.
Not at all.
But yeah, so from a wheat point of view, it's the distilling market. So we're predominantly group 3 and 4 soft wheats, and I know there are some milling opportunities there, but generally speaking, the distilling market is where we're heading with that. And the same for our spring barley, particularly for malting. Which we have been doing relatively successfully, thankfully. And from our winter barley and winter oats, we grow into a milling situation with a local miller. So producing pearling barley for soup predominantly, and milling oats for the various things that milling oats go into. So we're trying as much as we can to, although the rotation is relatively set, trying to sort of grow things that go into markets that are relatively close to us. Oilseed rape would be the exception, obviously. That's a slightly more global commodity in that respect. So.
Yeah, absolutely. And I think that's something, like I say, that local demand centre is a really important thing in it. Having contact, be that through a merchant or, if some of those smaller niche things directly with where it's going is really important. And equally as making sure, I guess, you're delivering to your specification and knowing what that specification is and who you're having conversations with to determine what needs to go there.
Yeah, absolutely. I mean, I think over the years I've learned that it's really important to cultivate relationships as much as you can, and particularly for those crops that have a particular specification that might be a little bit more demanding than others. So you're talking about milling oats, for example, or malting barley being 2 examples where the specifications are probably more demanding. And well, let me put it another way, the penalties for getting it wrong are higher than they would be for a more general commodity like wheat, for example. So so dealing with the local guys, variety choices will often come out of discussions with them. And subsequently then the sort of specs that they're looking for, the malting barley spec up in Scotland is generally below 1.65 nitrogen. That's the main one. We've had some issues with variety skinning, problems at harvest time. We're slightly trapped in the varieties that the maltsters want, so we've got to manage that. So these are the sort of things that we're continually discussing with the people that we sell to.
Yeah, absolutely. And just, on that what to sell, it's the first step of making sure you achieve the best price possible is delivering what your market needs.
Absolutely.
Without that, then it's certainly very difficult to make the best possible margins. So moving on from that, I guess we know what we're going to sell. The next question is how much we're going to sell. And I guess that's from multiple different angles. Probably one to start with is, if you're looking to forward sell, how do you make your decision about how much you're going to sell forward?
And how much are we going to produce?
Absolutely, absolutely.
Yeah, no, that's it. So, I think as much as we possibly can, we know, I suppose, having been on the farm now for 20 odd years, I've got a pretty good idea of where the averages should be.
Yes.
Given where our crops are, and we have some anomalies from year to year, some on the high side, some on the low side. But in terms of budgeting, we've got a reasonably good idea of the sort of tonnage that we should be producing. And that budget's often done before the crop's even in the ground. So, from that point of view, we're looking forward. I'm pretty risk averse, it has to be said, on the whole, and certainly in a number of years where we might talk about strategy later, but in terms of what we're going to sell in advance of knowing what we have, then we've got to be pretty careful. And what looks like a good crop in the autumn and the early spring can turn out to be much less than, or possibly much more than, by the time you get to harvest. So there's a number of different factors at play there.
Yeah, definitely. And we were talking about that before we started. Particularly in England this year, we've had challenges where yields were particularly low following a poor establishment period, then the beast from the east coming in, and then a drought has certainly led to challenges. And I guess that all comes down then to, like you say, your perception of risk and your attitude going forward. So we know sort of what we've budgeted. I guess the next thing from there is knowing how much room you've got available in the shed at harvest. And
how you
approach that.
Yeah, absolutely. We've been struggling laterally. We've identified, and this is one of the things the Monitor Farm program has not necessarily brought to light, but certainly helped me with some of my decision making, is that we've been pretty sort of chronically short of storage. And the handling system, I suspect, on many farms like ours, is probably a little dated. And if you had a clean piece of paper to start all over again, which thankfully we're going to do, you would do things differently. So we have had some challenges there. So we've, for example, in our particular situation, we have to sell our oilseed rape, or at least have to move our oilseed rape at harvest time. We've taken some other decisions as to how to market that through pool marketing, for example. We have to move winter barley at harvest time. And we have to move winter oats at harvest time, because really, to be able to deal with the malting barley, although that goes away anyway at harvest time, we've got to still throughput it through the system.
There's a bigger picture there, isn't there?
And there's a bigger picture, of how do you do that. And I think what we've decided to do now is to upgrade our storage so that we take a bit more control and take away the need to sell at harvest or the need to move at harvest, which usually puts us at a bit of a disadvantage in the marketplace, and we lose a little bit of control by not being able to decide when specifically we'd like to sell something.
Absolutely, and that raises another really important point about how much to sell, or your decision to sell. I guess around store management as well. I know it's something you mentioned you wanted to raise, and the importance of that.
Yes, I mean, I think that there's two sides to it. One is dealing with it at the time. The second one is if you're going into long-term storage, store management and hygiene then becomes vitally important, because it's all very well producing it and then making a contract to sell it. But if you then have a deterioration in store and before you sell it, then it doesn't look very well. And it doesn't reflect well on you, and certainly doesn't reflect well on the price and the relationship that you built up with the buyer.
It all comes back to what we were saying before, and how do you know what to sell? You've agreed a contract, and you've got to deliver to that contract.
Absolutely.
Make sure you manage it so that you do. I guess another important thing to raise would be knowing when's the right time to sell, and knowing your storage costs so that you can identify if the carry in the market from 1 month to the next is justifying keeping it in storage.
Indeed, and I suppose that's a wider discussion in terms of strategy.
Definitely.
As to, the carry in the market is one element of that. Your need for cash flow requirement is obviously another. And then, you then start to factor in all of the other things that the carry in the market today might not necessarily reflect what might happen 2 months down the line. So having some sort of information stream on fundamentals and the things that are happening around the place, and I know we're going to come on to that later on, all have a bearing on those decision-making processes. So yeah, it's not an easy thing.
No, certainly
but it's a critically important thing
from
a point of view of business performance.
Absolutely, and I guess another important thing, like you say, really important that we know the information, and that helps us to determine what a good price is, or certainly starts to point us in the right direction anyway. Like you said, how do we ever know what a good price is? Usually after the event. Usually
afterwards, and you sit down and say, how have we done? And you either pat yourself on the back or go and bury your head in the sand somewhere. But yeah, things like cost of production, vitally important. And within that, given the vagaries of a growing season, we are in a position where, generally speaking, we have to commit to a certain level of input at a certain point in time in the growing season. And some of that is dictated by weather, and the weather then ultimately might dictate as to where your yield finally ends up. I keep trying to remind people, and it was something that was taught to me by a guy years and years ago, is that the highest potential for your crop is when the seed still sits in the bag.
Yeah.
And everything you do from the time that you sow it to the time you harvest it is trying to retain as much of that yield as possible, rather than building it from zero up the way. And actually, if that is your mindset, that helps you a little bit to determine, how you grow that crop.
Absolutely.
So it's a little bit like the Dutch auction, where stop the clock as high as you can, and get the most out of it. So one of the things the Monitor Farm program has brought to us, is knowledge of our cost of production. We've been pretty good over the years in trying to make sure we know as much as possible where we are.
Yeah.
So we budget our, in advance, etc. Things happen during the season that knock that out of kilter, obviously, from time to time. But we always know where our break even is.
Yeah.
And then, what we're trying to do is increase that margin ultimately at the end of the day.
Absolutely. And I guess that's
and you can do that by increasing yield, which is the key. You can reduce your costs, and that doesn't just have to be the growing costs could include obviously the cultivation, establishment, all that sort of stuff as well. So.
Absolutely. And I guess that's as a farmer, fundamentally a price taker.
Yeah.
So it's looking at what you can manage to help your margin, and then also, I guess, looking at bits and pieces to help you maximize on returns when they're there. I guess for farmers listening, important opportunity to mention that there are tools out there to help you manage your cost of production, and keep an eye on your net margin and bits and pieces like that. And obviously the AHDB have got Farm Bench in the pipeline in January, so something to keep an eye on.
That benchmarking thing is important though, because I think we need to be aware. It's difficult to be aware of where you are unless you compare it with somebody else.
Definitely.
And I know it's very difficult to compare like for like, because most farms are, they are different in some way or the other. And sometimes it's not the figures that are important, it's what the decision-making process is behind the figures that are important.
Yeah,
and that's where you can actually learn a lot more from each other as to how to, help manage your own cost of production.
Definitely. And I think the same is very much true if we're talking about sources of information and understanding of the market, or maybe where you're selling, who you're selling to, is also, coming from those discussions you're having with other farmers. So for me, I was down at a Monitor Farm meeting a couple of weeks back, and the openness there about how people approach marketing and how people, approach understanding the market, speaking to one another, again, there is a really important tool in your arsenal as a farmer.
Absolutely. And AHDB do market reports, etc. I decided some time ago that as I said earlier on, the finger in the air approach wasn't really working. There was a joke going around in our neighborhood that if I sold wheat everybody else was to hold off for a fortnight because the market was undoubtedly going to go up. And unfortunately, it happened rather too often. So I decided really that I needed to take some steps to actually introduce some strategy. And the introduction of the strategy has come from taking on board more information ultimately.
Shake off that reputation.
Yeah, absolutely. Give somebody else the problem. But yeah, it's more to do with I'm still a decision maker now.
Yeah.
But I'm now garnering information, including some that I do admit that I pay for some advice from people who are looking at the world markets and the wider picture, and giving us some idea of how to build some strategy. And that's so far been working really well for us. And we're seeing better. Again, I know we're going to come on to what is a good price. Well, we're talking about what's a good price, but I've had a mindset change through all of this. Chasing that top price is a dangerous game, because with the volatility that's out there at the moment, 1 week too late, and you're not only missing the top price, you're actually dropping below the average price because there can be a world market scenario, and all of a sudden either falls out of bed or something goes wrong, or so accepting a more sort of realistic average, rather than trying to keep the average bar as high as possible, rather than trying to sort of rely on trying to hit the highs and avoid hitting the lows.
I think that's the thing, isn't it? It's the danger of chasing the highs, where having a strategy, although you may not achieve that absolute high, can certainly help you to get above average or certainly that average line.
Absolutely.
And that's really important. In terms of the market information sources, just having a source or a couple of sources where you can draw information on what the market's doing is really important. I guess you've got 101 other things to be doing than being concerned about what the weather's doing in Australia.
Absolutely.
Or how planting of a maize crop's going in South America. And that's, I guess, where myself and the team I work in can come in and start to pull that information in for you and really help you to understand the direction of the market, so that when we come on to things like we've got here with where prices are, are they going to continue on their path, or are they looking like they're going to turn in the next couple of weeks? And certainly that's one of the things about, I guess, knowing what a good price is how it compares to previous prices, and whether it's going to keep comparing in such a way.
I think the one of the difficulties is that when you set a budget, so the budget is not just the budget tonnage, but also the budget price. That's it's not quite a stab in the dark, but it's based on the sort of prices that are usually available at the time that you do the budget, and obviously take some of the market information. And I suppose this is where, again, the notion of some strategy doesn't just base itself on what's happening now. It's maybe looking at next year and possibly even what might be happening the year after. So to try and start building in, thoughts on how the markets and your reaction to the markets is likely to progress over possibly even over a 24-month period rather than just a 12-month period. It's so looking back is good. I tend to try and look forward. But at the moment, obviously, we're in a reasonably buoyant situation compared to where we've been over the last sort of 4 or 5 years.
You say that at the moment there, so come on then, James, at the moment, looking at the market, what's your kind of feeling? What is it looking good?
It's the $1 million question, really. And it does come back to what we were saying about pooling as many bits of information in as you can. Certainly in the old crop market, so if we were to look at the futures price as a bit of a proxy of that, we're seeing a May price which has firmed quite a bit, and there's been a number of different drivers of that. Everyone's favourite B word, or least favourite for many people, Brexit.
Oh, you're the first one to say it.
I know. I just wanted to tick off the bingo card there. Although we may be getting a bit bored of talking about it, nobody really knows what's going on. Currency has been a real driver of prices of late. As the UK being a net importer of wheat, albeit different grades to what we might produce, we are very much a price taker from a country perspective, and that means that our relationship with the EU from a currency perspective and with the US means that our prices will fundamentally change at a different pace one day to the next, and can drive up an increase in volatility in our price.
Mm-hmm.
If we're looking at, what am I watching at the moment keenly, it would be pace of exports from Russia. We've just seen them miss out on an Egyptian wheat tender. They were above the market, so they've gone out pretty hard, pretty quick, and that's something to watch, because Russia are the major exporter of wheat in the world. And if their prices start to rise, it's normally a proxy that we can see that in the global market. Equally though, and slightly counteracting that, at the moment you've got the US export pace. They went out pretty strong last week, but this week they've slowed off quite a bit, so that's maybe slightly dampening. So yeah, it's a difficult one. Dodged the question slightly there, because I guess if I knew what the wheat price was going to be in 6 months' time,
I would be sat here.
It'd
all be in Bermuda, wouldn't it?
Absolutely.
Yourself, yeah.
Absolutely. But what I would say, certainly, if we're looking at the new crop market, there is a lot of important data coming out in the new year, especially on a global perspective. So we'll have US wheat planting intentions come out early on, and they'll start to set the trend. And then again, I'll be back on the weather watch, keeping an eye on South American forecasts, US forecasts, as well as international prices. And all of that then comes back onto our price. And like I say, it's the global price, our price. So one thing I would highlight at the moment, though, is where we are with forward prices. And we've got a very strong November 19 price at the moment, particularly compared to previous years. And we'll come on to risk and volatility in a moment. But forward prices certainly allow an opportunity to mitigate some of that risk. And that's something you're utilising, Bill?
Yes, absolutely. And just listening to you giving your sort of analysis there, one of the things I've enjoyed about taking a little bit more control and finding out a little bit more about things, actually I've begun to get quite interested in what's happening around the world.
Yeah.
And different things, and I'm trying not to sound too knowledgeable about it, because I'm not a grain trader, but I am taking on board the information. And so, for example, one of the things that we've looked at over the last sort of 2, 3, 4 months, given that we started over, just touching £200 a ton for wheat, for example, back in just before harvest, where we are now, obviously, is quite a bit lower than that, and we're looking to try and some of our strategies built in around that when there's a spike in the market, that's a sensible time for us to release some wheat back into that market. If and that's not necessarily actual price determined, but more the fact that there has been a rise.
Yeah.
So let's take advantage to try and sell into the rises rather than falls.
Yeah.
And so that's been one probably big change for me, is that don't react to a fall, try and react to a rise.
Absolutely.
Absolutely. So and that's all coming to me from information I'm getting from 2 or 3 different places.
I guess again it kind of comes back into that. It's a bit of a psychology shift, isn't it? Where often it can be suggested that farmers are always chasing that top price, and if you chase the top price, you're rarely going to achieve it, because the moment you realise it's not the top price is the moment it started going down again. Interestingly, they say you don't want to get too caught up in the discussion of the market information kind of thing, because you're not a trader.
No.
But it's that sort of information which helps you have that conversation with your trader. And if they're phoning you up saying need to sell some wheat, it helps you have an informed conversation with them.
Absolutely. And I without being too disrespectful to merchants, generally speaking, because we do rely on them and we do have a relationship with them, I think if they know that I know a bit about what I'm talking about, then it then provides a better forum for a discussion, rather than to just take it, actually discuss it and say, well, no, I don't think so at the moment, or whatever.
So yeah, you touched on that. What comments would you both have on having relationships with your grain trader? Kind of how do you develop that? I don't want to get in trouble with all the grain traders. They do an excellent job, but
yeah, I think, well, I touched on it, I think, at the start, didn't I, that cultivating relationships is really important.
Absolutely.
And particularly, from our point of view, for example, growing malting barley. Now that's a particular niche market. It's a big market, but that particular market is quite specialized. Niche is probably the wrong word. Specialized would be the right word. We rely on the merchant or merchants, for those that deal with more than one, to have a relationship, to know that they will look after us.
Yep.
Provided that we provide them with what they want. And it'll be no secret that one of the bugbears over the years about malting barley specs is, you know, if it falls out of spec, the penalties are there as deductions, and nobody likes having deductions. And unfortunately, you know, from time to time there'll be a little bit of suspicion that perhaps, you know, when there's a plentiful supply of things, that you know, the deductions might be there more than people would expect them to be.
And I would guess that's an important time. Again, we come back to grain store management, an important time to be, you know, retaining samples and making sure you're sampling your end as effectively as anybody else.
Exactly that.
So that, you know, if that situation was to arise, you've got something there to
but
go with.
In that cultivational relationship comes some trust.
Absolutely.
And it has to come trust, because, you know, at the end of the day, you know, we're sending grain off to there are times when we send grain away but we don't know precisely what the price is going to be.
Yeah.
And that's not a good position to be in, but it does happen sometimes, particularly with something like malting barley, where, you know, until the malting barley quality is all known throughout the country, then where is the price going to be? You know, exactly. So, you know, we were talking earlier on about business strategies, overall business. And if you said to a businessman, well, I send my commodity away for sale, but I don't know what I'm going to get for it until it's away, you would think you're absolutely barking.
Yeah.
But, you know, we understand that that's where we are with it.
Somebody's asked on the floor, what were the forces, external or internal, that made you take control of your grain marketing?
Making too many mistakes. So realizing that volatility, excuse me, and realizing that I needed to be more proactive about what I did and understand a bit more about what I'm trying to do, rather than just relying on a gut feel.
The same question also has, how do you deal with local competition? Do you see yourself having local competition
with other farmers? No, I don't think so. I think the marketplace is big enough for, you know, we're not necessarily net exporters of barley, the malting side of things, for example. So no, I don't see ourselves as competitive. We possibly ought to be more collaborative in our marketing. We've had a wee look at it through the Monitor Farm thing, to possibly try and set up a supply chain. It's not that easy to do. We as individuals tend to be a bit individual, a little bit insular sometimes in our thinking. We maybe ought to be a little bit more, sort of a bit broader in our thinking, maybe sometimes. You know?
Absolutely. And I think that, you know, you being here tonight discussing your experiences is a really important thing that highlights that competition. You know, it's not a competition with your neighbour. It's, you know, you're on a world stage competing with, particularly if you're looking at maybe a raw commodity perspective, you're on a world stage competing with prices coming out of Russia, out of America, out of Australia. And that collaboration really helps to ensure that you are doing the best as a group and you all prosper rather than one.
I mean, don't get me wrong, there's a competitive element to being a higher yielding
without a doubt.
You know, but that doesn't necessarily mean from a marketing perspective that we're competitive or competitors against each other necessarily. Certainly not in our area. I think that there's, you know, that's not an issue.
I think that competitive drive is important, even when you're, you know, collaborating, because you're pushing each other to do better. Be that with your grain marketing and pushing each other to achieve, you know, the better margin, or pushing each other to achieve the better yield or better quality. You know, it's all helps in the right direction.
It does.
So we've had a bit of a look there at how do we know what a good price is. It's where does it compare to the average, where does it compare to previous years, and then, you know, the knowledge and information, how important that is in terms of, you know, identifying whether something's a bit of a blip in the market or whether something's there to stay, or whether we're going to see a reversal. That all sort of lends itself to risk and volatility. And perhaps, Bill, you could talk us a bit through how you manage volatility yourself.
Well, the first thing I had when I realized that I wasn't making a particularly good job of it on my own, we decided to look at pool marketing. So that was our first. So, you know, a level of risk management really became quite key for me to mitigate some of the mistakes I was making.
Definitely.
To be honest. So, and I would hate for everybody out there to think I didn't make some good sales and all of this. That did happen too. But ultimately, you know, the risk management became really quite important. And so, although with a pool situation, you're effectively giving the grain to somebody else to market on your behalf, I suppose what I was doing there was the beginning of what I'm actually doing now,
Yeah.
which was giving somebody else who has the information, who has the background, who has the tonnage, to mitigate some of the sort of more volatile elements of the market. So we did that, and we still do that a little bit. So even though we're doing, so for example, my oilseed rape is on pool contracts at the moment. I've got a little bit of wheat on pool contracts. There's a little bit of competition there to see if I can beat the pool, using my information and the strategy I'm developing to see how the pool performs. It's a little bit of a sense check, I suppose, from that point of view. So yeah, using different tools, I suppose. We also managed to negotiate from time to time a minimum price contract for some of our stuff, and that's a very helpful position to be in. I know it's not available to everybody across the country. That's not all merchants will deal with that, but we have an arrangement with one particular merchant that gives us that opportunity, and so that's very helpful because it's an absolute floor in the market, which guarantees them a supply from me of a decent tonnage of whatever that commodity might be, but it also means that I could actually set a budget and say, well, I know I'm going to get, provided I produce a spec, that will be the least I'll get for whatever my projected tonnage is. So from a point of view of budgeting, it's a much easier position to be in. So that helps to manage the risk as well, because it's the risk of the business is getting your budgeting wrong. And
Go on, there's a question on there. What is your appetite for risk? What would you say your appetite for risk is like, Bill?
I'm pretty risk averse, if I'm being honest. That's not to say that I've become a little bit more managed my risk a little bit better. So risk aversion doesn't necessarily mean you don't take any, but I'm now managing it a little bit better because I'm more comfortable about making informed decisions on that.
Yeah, definitely.
Rather than just, as I say, back to the old finger in the air. But
it's about what you're comfortable with, like you said.
Yeah, it is.
Absolutely, and it's also about having a plan to manage that risk. So I've put a few examples there. Every year at AHDB and our market intelligence team, we pull together some we call them our marketing strategies. They're not there to say, like you said at the start, Richard, there's a silver bullet and you should be taking this approach. It's to say, have a plan and think about what you're doing, and also what you want to achieve, what your business objectives are. Do you want to average your sales over a certain time period to ensure you're receiving a almost reflective average price? Do you want to minimize your downside risk using a stop loss approach? So every time the price moves below a certain average, you make a sale. Or in your approach, Bill, as you mentioned earlier, you're looking at the market and saying, well, we hit a point where the market's rising and we say, okay, that's our point, and take advantage of the rises, but also have a mitigation against losses in there.
Yeah, absolutely.
How, I guess, one there about how you average sales. How do you make sure you're not selling too much at one point, or do you budget a certain amount for sale each month?
We budget. It's cash flow driven to a degree. So for example, this year, cash flow wise, things are slightly different. Up in Scotland, we had the opportunity to take, because of the issues of the drought over the summer, etc. And we had the opportunity to take our single farm payment or basic farm payment on a loan basis earlier. So, the Scottish Government brought that scheme in, which has been very helpful. So that automatically then gave us a head start. And we knew that was going to be the case in August. So from a cash flow point of view, we sort of said, well, that's good, because now we don't have to think about necessarily the cash flow side of things just quite so early in the season. Don't get me wrong, we do need to get into it later on.
Some of that need for a bit of a knee-jerk sale because you need the cash flow.
Exactly. So that helped a little bit, and then it's all about taking advantage of looking forward to cash flow projections for the rest of the year as to when we're going to when the cash flow starts to come under a bit more pressure and we start to need to bolster it up.
Yeah, definitely.
And then it's not as simple as just taking that as a simple entity. It's that combined with the information we're getting, where's the market likely to be, where are we comfortable at the prices that we're selling at, where's our budget set.
Yeah, definitely.
It's all of the stuff back in the melting pot again, from that point of view. So
absolutely.
So yeah, we try not to sort of go holus bolus and the whole lot in one go. Although I know some friends and neighbours who do that. And they basically make a decision based on harvest, and when we've got what we've got, we sell it. And I suspect if you average their sales over a 5-year period, they're probably not much different to the long-term average anyway. So, you know, and it's not a one, as you've rightly put there, it's not a one size fits all.
No, absolutely.
You know, some people have other commodities that they have a much more higher value on. So from a point of view of marketing, it's easier just to take the cash at a particular time, and that's what we want to do. So it's business related as much as it is necessarily market related sometimes.
Absolutely, and that is a really important point. That there is no one size fits all approach to marketing. It does depend on the things we've gone through. You know, what demand have you got locally? What, like I say, what your business aims, and also what's your margin? You know, your sales always have to sell to your storage, your margin, and your market's requirements. It's a really important point to raise. Something else we've got there is the use of futures markets and options to mitigate risk, and they are often quite a subject that I guess can, you know, people find quite confusing, and it's important probably to say that, you know, there's something that you don't really want to be getting too much into before you've got a really full understanding of them, but they can be helpful in some instances as a bit of an insurance against market falls or market rises. In some instances if you're a buyer, but certainly from the market falls perspective, that's something that can be useful for some people. You've had some experience using them, Bill?
Yeah, I have, and your comments are resonating with me a little bit because if I'm being honest, I've tried to understand them fully, and I probably don't yet understand them fully. And if the guy that's tried to explain it to me happens to be listening in, and we go, God, spent hours and he still doesn't get it. You know, I fully understand the use of options, for example, to create a minimum price in a particular situation. And if you then sell out on that, if you gain from the market, then that's fine. The bits that I don't quite get, and you know, I have tried, believe me, to understand it, and it's not for lack of trying, but you know, the notion that options can be traded without the actual physical trading of grain is a bit of a disconnect for me. And yeah, I do understand. I can understand how it works. I'm not particularly comfortable in using them because I don't really think I understand them enough for me to be able to be in control of them.
And that's really important. You know, understanding how they work is one thing, but understanding how to use them is completely different. And if you don't understand how to use them, you can be on a bit of a hiding to nothing. So yeah, I think it's all about A, understanding them, and B, also managing them. You know, we hear some people say they've bought an option and then done nothing with it. You know, if you're not managing it effectively, then it can make the difference. You know, it could be a £10 per tonne swing in your grain price received there. So yeah, it's probably something that
I think there's often a perception that, you know, if you're offered a price on a day of let's say £150 for sake of argument, and the option cost you a tenner. So there's an immediate resistance to saying, well, okay, if I'm not in control of the market, and why don't I just sell it then for £150 and not take the £10 option? You know, we need to be making £12, £13, £14 on the market for that option to be good value.
Yeah,
as an example. So that's a very basic level of selling the wheat on the basis of the option.
Absolutely, I think.
So, you know, I think there's that then becomes a mindset thing. And if you're someone that's prepared to say, you know, I have information that I'm comfortable with, that the market will improve over a period of time, I'm prepared to ride that out. Then by all means, it's something you should be looking at. Personally, I struggle with that concept a little bit, and I'm very much I'm quite happy to deal in physicals. Rather than sort of abstracts, if you like.
But it's knowing that as well. Yeah, other people
do it very successfully, and you know, I suspect if I did understand them more, and if I do come to understand them more, they may become another tool in the toolbox, but not the be all and end all of it, you know, by any means.
Absolutely, and again, you said again there that personally they don't work for you, and that's a really important thing. It's having, like I say, the strategy that works for you personally, and that's kind of one of the first steps, I guess, of taking back control of your grain marketing, is having something that works for you
and being comfortable with it.
Definitely.
I've got a few questions coming, so we have a short question break and then we'll carry on. First one, James, what is generally driving up prices looking at the futures graph from November 2016 to 2018? What do you think, in your opinion, is kind of making that rise?
So
from the
Again,
2016, the back to the wheat futures prices. What's causing that rise from 2016 to 2018?
Okay, so yeah, there's a number of things there, but that is kind of fundamentally being driven by the global supply and demand. So what we've seen for the past 2 seasons is a tightening of global wheat stocks. So the wheat available on the market globally has shrunk.
So the markets,
effectively, it's then just becomes about basic supply and demand. There's less of something which is in demand, and that's pushed the price up over that period. From a UK perspective, that's true as well. We've now seen 2 consecutive years of a smaller UK grain crop. DEFRA revised the number down for the UK grain crop again today. What impact we see that coming through, I guess, depends on our relationship with the global market. We may see a bit of an impact in some of the physical UK prices there. But yeah, certainly from that futures price perspective, it's being driven by the global tightness that we've seen over the past 2 seasons. This year has been amplified, like we said, by tightness in Russia, tightness in the EU as a major exporter as well.
Got another one for either of you. What are your thoughts on cash and carry contracts using wheat futures?
I'm not going to answer the futures one because I've already said I don't really quite get that. Certainly we have used cash and carry in the past as a cash flow. So we've been paid a premium to store effectively, aren't we? So it might be £5 or whatever. And that allows you cash without physical movement.
In reflection, then what's the?
We tend not to use it because I think I'm now in a position where I'm more comfortable about being able to make sales at the right time. I suppose if you had they quite often appear at harvest time for October payment, for example, and it might be worth £5 or £6 over the physical market at the time for collection in May, but you've got storage costs. You've got to maintain. We were talking about store hygiene, etc. So you've got to store that grain right the way through to May, but it doesn't actually belong to you. So there's some sort of mitigating factor. As far as the futures are concerned, on the cash and carry futures, I'll hand over to my knowledgeable assistant here.
At the deep end. So I guess there's kind of the question there about whether the futures market justifies the carry in the futures market justifies the storing. And like you rightly say, it all boils back down into knowing your own storage, your own costs. I guess from the futures market perspective, you're looking at, I guess a prime example I can think of at the moment is maybe a carry from old season into new season or something like that, where we're seeing £20, nearly £20 fall from old season prices into new season prices. So some years you'll see the reverse of that, and you'll see maybe a bit of an incentive to carry through, but it all depends on the situation globally. And at the moment, certainly old season to new season, it's not incentivizing that. No. If you're looking futures month to futures month, again, it depends on, like say, how big that carry is through from one month to the next. If it's more than the cost of storage, then yeah, there's potentially an opportunity to do that. If it's less, then obviously that disappears. Again, it all comes back to individual appetite for that sort of approach. It will work for some people, but you really need to go into it with an understanding. As for anything, it's like saying you're going to buy a car without taking it for a test drive or without doing any research on it. It's important to have full information before you go into something.
Good, thank you. I won't hold you up anymore.
So I think we've covered a lot there about how we know what a good price is, how we manage risk and volatility. It's important, I guess, to have a bit of a conversation about things to consider with contracts, particularly as that can impact prices you receive, and certainly not having an understanding of what is on your contract can be a significant challenge. I've picked out a few points there around contract awareness. They're all from the Serial Sellers Checklist, which is available on the AHDB website. So for me, I guess there's a few things around what are the delivery terms? Are there any terms you can't load? It's an important thing to bear in mind, particularly if it's on buyer's call. I know there's been instances from my own experience where we've been going away on holiday and haven't been able to go when we'd necessarily like to because Dad's had a call that a lorry's in the yard. Could you go and load it? So that's something to certainly bear in mind. Are there any special terms there? That's something particularly, I guess, as we move towards that B word again, something to think about with tariffs, a possibility. How do they come into your special terms? And also, we've mentioned about store management and delivering what's required. Feedback, I guess, for me, something that's really important from your perspective as a farmer, Bill, to know that you're delivering what's required.
Yeah, I mean, just looking at the sort of slide there on contract considerations, the first thing I suppose is to make sure you have a contract. I've certainly had an instance quite a lot of years ago where I agreed a particular spec for, it happened to be multi-barley, agreed a particular spec for that verbally. No contract actually appeared, and there was then a little bit of a discussion around the exact spec.
Heated, was it?
No, not at all. But there was a discussion around the exact spec that had been agreed, which was out with the terms that would probably have been regarded as normal, because I had, certainly in my view anyway, had negotiated a particular set of circumstances. So the other thing I did discover, and that's coming around this contract thing again, is that when you verbally agree something with a merchant over the phone, for example, that is effectively a contract discussion. And if they send you a contract requesting you to sign it and send it back, by not signing it and not sending it back doesn't mean that the contract isn't binding, because the contract is already on the agreement by that time. So quite important to understand where you sit contractually sometimes, and particularly if you're dealing with something that might be of a particular spec that doesn't have an awful lot of leeway without penalty.
Absolutely, and it kind of draws us down into that little red box in the corner there, which is the same with regard to if you agree something verbally and then, like you say, with regard to not signing the contract and not sending it back, is still contractual. It's when you do receive that contract, it's checking everything is as agreed, and if it's not speaking up, like you say,
absolutely, and that's all about cultivating that relationship again. If you have a good relationship, then there's no reason for if there's a mistake or something not quite right with it, there's no reason for you not to go back and make sure that it's what you agreed and what you want, ultimately, given the terms that they're offering.
Absolutely.
There's one question here relevant to this, I'm going to ask it now. Selling forward for next year is more risky with the potential for tariffs. How do you think this would affect the current contracts for next year?
So it's a difficult one, obviously. Like I said before, we're no legal experts, and it's not necessarily our place as AHDB to say what shouldn't be on a contract. Certainly not our place there. It's certainly something that we would probably expect to see coming up. Certainly tariffs will be something that all businesses, regardless of in agriculture or if you're building cars, there's something that you've got to take consideration of going forward. A tariff on exports will fundamentally come back on the farmer if they're selling, because that price has got to come back in somewhere. So I think you'll probably find that it may be in some contracts and something you have to consider, but it's just having knowledge that it's there, and that your price is subject to change, or even if you're not accepting of that on the contract, it probably will come back into the contract somewhere because you'll be offered a lower price in that exporting circumstance.
And that's very much dependent on the markets that you're selling into. So
absolutely.
For our personal situation, we're generally selling into local markets, so we're not selling into an export market or into a merchant who's then going to export necessarily. It's mostly for home use. So but that's not to say that at some point or other they may then have to decide to do something with that, and then I've avoided the B word like the plague here, by the way, just in case I'm not going to get drawn either. I have my own thoughts, but
absolutely.
It's just yet another example of how uncertainty causes an issue, and we're trying very hard here with everything we're talking about here to be proactive and knowledgeable and specific about what we're doing, and yet there's something out there that we have no control over at the moment.
I think that's absolutely it. It's the having control over it is the important thing.
The sports psychologists would always tell you, concentrate on what you can control.
Absolutely.
Don't worry about, they say don't worry about what you can't control. we've got to worry about it because we don't know what to say. But at the moment, we can't do anything about it because we don't know what it is.
It's about knowing what you can't control,
Yeah.
and doing the steps to control the things you can control to make sure that you're still guaranteeing yourself that margin. And like I said, there's so much uncertainty around what's going to happen over the next 3 months, 4 months, that it is just one of those things to keep in mind.
Yeah.
But focus on the things you can control. Focus on things like your costs, and they can help to guarantee your margin as you go forward.
But I mean, it's a good question. It's not something I had actually considered in terms of contracts. So we for example, we've got some pool contracts that we're already in place for 2019 crop. We've made 1 or 2 sales into 2019. We're going into we're just about to go into an agreement on malting barley for the 2019 crop. So it's something I hadn't really considered. But it is. But park it in the back of the mind at least for a couple of months.
Yeah,
and see what happens. So.
And I think awareness is a big part of it. And knowing that it's something that could crop up is then something to check and something to understand more. And as with anything, I think as we move, anything we've discussed today, more than happy if anyone has got any questions later. Either we don't get a chance to cover them tonight, more than happy for people to contact me, and my details are at the end of the presentation. And I'm more than happily, speak to you and discuss what we can, how we can help you with those sorts of things.
That's just to reiterate what I'm constantly saying to the farmers that I meet. It's you're paying a levy here to AHDB. Get the most out of it. Get to people like James who can give you the expertise. That's all.
Turning the mic around for Richard. He's finished. Absolutely, and we're more than happy to engage with as many of you as we can, because it helps us focus on the things that are important to you. So I think then we're kind of coming round to summing up the bits that I had sort of in my mind to talk about. Some key take-home things for me. The most important one is have a plan, and that's surrounding a point that's further down: your market, your margin, your storage. Have a plan about how you know what a good price is. Take advantage of available market information sources to stay on top of what's driving markets. Be the second thing. That way you know whether something is a genuine movement in the market that we're going to see sustained, or whether that's something that we could see in the short term and the general price direction stays. And finally, and just to reiterate it again, grow and sell to your market, margin and storage requirements. Like I said, my contact details are there. I'm not alone in the market specialist team. There's 6 of us shown on that screen there, and there's a couple more as well. It has cut off some of my contact details there, but I'm sure we can circulate those after. So I guess it just hands over there to any questions.
I've gone through a lot of them were asked, and we've gone through them afterwards. There's one I don't want to catch out because you're a wheat specialist, but there's one asking about rape future pricing. Any tips on what factors do you need to take into account to get an on-farm price?
Oh gosh.
When looking at rape futures.
So I guess with the UK, we obviously don't have a rapeseed futures market, and our futures price will be, or our market price will be dictated to a degree by the makeup of Matif rapeseed futures, the French rapeseed futures. So if you're looking at our relationship to that, you've got to consider what the haulage cost is in there, because futures to X farm is a calculation of haulage effectively. So you've got the cost of haulage. You've also got the cost of freight if you're looking at your relationship to French futures. But above and beyond that, it's about keeping an eye on those fundamentals in global markets. So what's happening with French rapeseed production, European rapeseed production, what's happening with Canadian canola production, oilseed rape, the same in Australia, and taking control of those things in terms of the calculation from futures to X farm. That's
quite a tricky one.
It is a tricky one, and one that
you chuck in Malaysian palm oil and things like that impact on the oil side of the market. On the end user side, and that then has a knock-on effect back into the
so much to look at. I think we have seen a bit of a dislocation of late between some of the other oilseeds, particularly soybeans, have become a bit dislocated from the rapeseed market, which does make it a harder one to call. But yeah, in terms of the calculation, it's leave that to the traders and the merchants.
Almost moments after you mentioned, well, we tried to avoid mentioning Brexit, Bill. Someone's asked me, what's Bill doing to Brexit-proof his business?
I'm trying to become more resilient. I'm becoming more aware of my cost basis. I'm trying to produce more from less.
Yeah.
A lot of what we've been doing, somebody asked me the same question when we started the Monitor Farm program, and it was about trying to future-proof my business, or the business that I manage for my farm owners.
Yeah.
And by doing that, I'm trying to build in some sustainability and be really good at what we do.
Good.
That's the key to it, I think, for us. Diversification is absolutely essential if you've got those opportunities. But even if you do that, you've got to really focus on your core business and make sure you do what you do well to the best of your ability to maximize that margin. At the moment, I don't see us changing a great deal in terms of what we're doing at the moment. And that's not to say that once we see how things develop, if some of the markets disappear or change or whatever, or indeed other opportunities appear, and there may be opportunities that we don't know about yet. There's been a lot of talk about protein growing, for example. I dare say, I think somebody suggested to have grown a soybean crop in Scotland. I think it was hidden in amongst some barley at the time.
Good luck to them.
The James Hutton Institute, I think, have been having a look at that. So I'm not suggesting we're going to grow wall-to-wall soybeans, but things like lupins and things like that. If there's a requirement for us to grow more protein because there's difficulty in attaining protein from elsewhere, then these are the sort of things that might become an opportunity to us rather than something that we've got to see as a challenge.
And they're sort of the additional considerations that come into play. But I think something you said there that around future-proofing your business in terms of Brexit is more widely about future-proofing your business regardless of Brexit, and keeping a control on your costs, and keeping an eye on
being
what's
aware
going
of
on in
them,
markets.
just knowing where they are,
being aware is something that kind of needs to happen in businesses to future-proof them regardless of Brexit.
So the presenter on last month's webinar was from New Zealand, and his kind of message to us when he left was, "Don't waste a good crisis."
Seize the opportunity.
He said it's happening either way, don't waste it. So kind of the last kind of question I'm going to ask, and so someone has kind of asked it here, is you did touch on it earlier, is mindset. How important do you think that is with all of this? Having a positive attitude and how you approach this and doing things you understand. How important do you think that is, guys?
I think it's vital, and I think I've become more comfortable about what I'm doing because I've sort of seized a bit more initiative about what I'm doing. So, rather than relying on hope, I've actually decided to take some advice on board, to look at risk management, to take some other tools on board to help me to, if we're talking specifically about grain marketing anyway, so that I'm more comfortable that if it doesn't work out, it's not because we haven't been positive and tried to do something about it. So rather than hoping for the best and relying on good luck, take a bit of control. So that's what we're talking about, isn't it? Taking control, really.
Absolutely. And I think what you're saying, if we're thinking about mindset, one of the important things to remember from your mindset perspective is, like I said before, with regard to benchmarking, or with regard to having those conversations around how you're approaching marketing, is that as farmers, you're not in this alone. You're not in grain marketing alone, and having conversations, be that with your fellow farmers or conversations with people like myself on the market information side, can all help you with that mindset movement, and help your business going forward.
And I've certainly one of the other mindset changes that I've come across, really, in the way I've portrayed the business that we run, is a bit more openness. I know it's not easy sometimes to open up about what you do, but I've been quite comfortable about that. And I'd like to think that then helps, and it has come back through the Monitor Farm feedback process, that people have actually related to and been appreciative of the fact that we're quite happy to be open about, particularly when things don't go right. It's very easy to crow about things that are fantastic, but it's equally important to talk about things that haven't worked out. And you know, we are all in it together at the end of the
Yeah.
day. And if I've made a mistake and somebody else can learn from that and not make the same mistake, well,
Absolutely.
all well and good, you know. So.
Right, gentlemen, thank you very much. As I think you'll all agree, and there's some kind of excellent messages coming in, kind of thanking you all, you both for doing this tonight, and kind of everyone's here saying kind of it's a good mixture of experiences and technical expertise. Thank you both for giving up your time. Really appreciate it. Bill, this is your first experience doing a webinar, and it really kind of helps us having a farmer here to kind of base it around a bit of real life. Otherwise, it can be quite a dry topic. So I'm going to finish on advertising the next webinar, which is the 17th of January, same time at 7 o'clock. This webinar will be focusing on crop nutrition. We've got Peter Berry from ADAS and David Bell from Fife, farmer from Fife, I should add. I've been chatting to David today about kind of content that we were looking to cover in terms of crop nutrition, and kind of the questions we're going to be looking at, kind of like bagged versus compound versus blends, liquid versus granular, how to take fertilizer prices into consideration in all of this, variable rate application, and things like product choice, kind of straight AN versus urea. And again, David will be providing us with some questions and some commentary as we go through. So that's the 17th of January. And yeah, so we'll see you then. Just to thank again Luke, for my colleague who's been looking at the behind the scenes of this and keeping the technology working, as I'm not so good at it. Thank you, Luke, and thank you, gentlemen, again, and thank you all, and good night. Cheers.
Cheers.